Markets are pausing, not breaking, pausing. And the reason is straightforward. A lot of important information is about to hit at once. Futures tied to the major US stock indexes slipped in early trading. Contracts on the Dow Jones Industrial Average, the S&P 500, and the Nasdaq 100 all edged lower. The move was modest, a cautious repositioning, not a sharp swing in sentiment. When investors know a heavy week of data is coming, this is a familiar pattern. You reduce risk before you get new information, not after. So what is coming? Two things, running in parallel, and both matter. The first is a run of economic data. Reports on jobs, consumer confidence, and growth are all due this week. Each one carries weight right now because the Federal Reserve is still watching the data closely to decide where interest rates go next. If the numbers show the economy is still running hot, strong hiring, stubborn prices, the case for rate cuts gets harder to make. If the data softens, the picture shifts. Bond markets will move on this. Equity markets will follow. Traders know that, and they are positioned accordingly. The second focal point is Nvidia. The chipmaker reports earnings this week, and its results have become something of a referendum on the artificial intelligence investment boom. Nvidia is not just a company reporting quarterly numbers, it is a signal. When Nvidia has posted strong sales and forward guidance in recent quarters, it has lifted sentiment across chip stocks and pulled the broader Nasdaq higher. When results disappoint, or when management sounds cautious about what is ahead, the reverse happens. The whole technology sector tends to feel it. Put those two things together, a macro data week and a high-profile earnings report, and you get a layered test for markets. Investors are trying to answer two questions at the same time. First, is the economy strong enough to support corporate earnings, or is the pressure from higher rates starting to bite? Second, is the artificial intelligence spending cycle still intact, or are cracks forming? Right now, the futures market is not answering either question. It is waiting. The mild decline in contracts reflects neither panic nor complacency. It reflects a measured, professional reluctance to make big bets before the evidence is in. How Nvidia's results land, and whether the week's economic data points toward rate cuts or continued caution from the Fed, will set the tone for both equity and bond markets heading into September. The practical takeaway: in a week like this, watch the guidance more than the headlines. Nvidia's forward outlook and the direction of the jobs data will tell you more about where markets are headed than any single day's price move. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.